Welcome to today's market report. European stock markets edged lower on Tuesday with Brexit uncertainty weighing despite the rollout of COVID-19 vaccine and likely monetary and fiscal stimulus. DAX in Germany traded 0.1% lower, CAC 40 in France fell 0.1%, FTSE 100 fell 0.1% too. UK Prime Minister Boris Johnson will travel to Brussels for crisis talks with European Commission President Ursula von der Leyen later on Tuesday as negotiations over a post-Brexit trade deal threaten to collapse. Continued differences over fishing rights, fair competition and ways to solve future disputes threaten to spike a deal over how to govern around $1 trillion in annual trade before Britain's privileges under the transition agreement expire at the end of month. Adding to the worries is the impact of the winter surge of the COVID-19 virus that has caused a string of renewed lockdowns, including strict measures in the US state of California and South Korea. In Europe's largest economy, German state governments are increasingly tightening restrictions on business life, although they continue to resist pressure from Federal Chancellor Angela Merkel for a nationwide clampdown. The UK, meanwhile, started vaccinating its public with the Pfizer-BioNTech injection earlier on Tuesday, and the US Food and Drug Administration meets to discuss this vaccine on Thursday. European authorities are expected to authorize its rollout by the end of the month. Additionally, the European Central Bank holds its latest policy-setting meeting on Thursday, with the central bank widely expected to increase and extend its pandemic bond buying program. On Capitol Hill, Republican and Democratic negotiators continue to try to reach an agreement on a COVID-19 relief package, with last month's weak payrolls data adding a degree of immediacy. In corporate news, Ashtead stock rose 4.3% after the industrial equipment rental company lifted its full-year guidance despite reporting a 10% fall in pre-tax profit for its fiscal second quarter. Oil prices edged higher on Tuesday, continuing recent gains ahead of US inventories numbers. Crude future traded 0.1% higher at $45.80 per barrel. Brent contract rose 0.1% to $48.86 per barrel. Both benchmarks lost around 1% Monday, but this followed 5 consecutive weeks of gains. Gold futures rose 0.2% to $1,869.70 per ounce. On the FX front, the GBP-USD pair remained depressed through the early European session and freshed daily lows around 133.30 region in the last hour, albeit lacked follow-through. The pair failed to capitalize on the previous day's solid intraday rebound from the 132.25 region or over 2-week close and met with some fresh supply during the early part of the trading action on Tuesday. As investors await fresh Brexit-related updates, a modest pickup in the US dollar demand was seen as one of the key factors exerting some pressure on the GBP-USD pair. It is worth recalling that the pair witnessed some aggressiveness selling on the first day of a new trading week in reaction to the incoming Brexit headlines. The EU's chief Brexit negotiator, Michel Barnier, was reportedly very downbeat about the possibility of sealing a new trade deal with Britain and said that the 3 key outstanding issues remain open. In the next 1 to 3 weeks, the UOB group highlighted yesterday that we still prefer to wait for a daily closing above 134.81 before expecting a move to 136 and beyond. However, GBP sliced through the strong support at 133.20 and plunged to a low of 132.25 before rebounding strongly. The risk for a sustained advance has more or less dissipated, and from here, GBP could trade in a choppy manner within the broad range of 132 to 135. The seasonally adjusted GDP expanded by 12.5% in the third quarter in the euro area and 11.5% in the EU. The data published by the Eurostat showed on Tuesday. The shared currency showed no immediate reaction to these figures, as they were largely in line with the flash estimates. Euro-dollar was up 0.12% on the day at 121.22. The pair reclaims ground lost pari passu with the softer mood surrounding the book, and despite it still navigates in the overbought territory. Persistent pandemic concerns, Brexit uncertainty, and renewed US-China effervescence lent some support to the dollar in past sessions and motivated the knee-jerking spot from fresh 32-month tops near 121.80. The dollar edged higher with traders balancing rising COVID-19 cases and expanding lockdowns with likely fiscal stimulus and a vaccine rollout. The dollar index was up 0.1% at 90.907, only slightly above the 2.5-year low of 90.471. This is today's market news. Thanks for listening. We'll see you next time.